Ladies and gentlemen, it is happening. Meta, previously called Facebook, they are in big trouble. Right now, they're losing billions and billions of dollars, and they've just announced a new round of layoffs, and it's going to be up to 21,000 people lose their job. Now, the reason why I'm talking about this and why this is important for us is because this is going to give us a picture into the broader economy and how these businesses are really doing. Because while these high-paying jobs and these good-paying jobs are going right now, that'll eventually flow into the middle-income paying jobs and then the lower-income paying jobs. Because right now, according to the BLS report, unemployment is at 3.4%, a record low. But I think you and I all know that that's not true. And even, for example, if they have zero unemployment, but all the jobs are minimum wage jobs, well, that's not going to be a good economy, and consumers are not going to have enough money just to cover their basic essentials. But everyone, why is Facebook losing billions? What were these layoffs that were announced? And what is some more insights into the future? Well, that's exactly what we're going to go over in today's video. So let's not waste any time. Let's get straight into the news, the facts, and the data. Okay, first things first is this, everyone. Meta was fined a record $1.3 billion over EU user data transfers to the US. Well, it just gets worse for Meta, aka Facebook. We all know they haven't been the most honest in handling people's data, and that's exactly why I don't use Facebook anymore, but this report shows how deep it goes. The decisions links back to a case brought by Austrian privacy campaigner who argued that the framework for transferring EU citizen data to America did not protect Europeans from US surveillance. That's exactly right, everyone, but you better believe they're transferring US data as well. The Irish Data Protection Commission that oversees Meta operations in EU alleged that the company infringed the bloc's general data protection regulation when it continued to send personal data of European citizens to the US despite the 2020 European Court ruling. Well, everyone, it seems like Mark Zuckerberg is a real psychopath, isn't he? He doesn't seem to care for people's privacy, people's data. All he cares about is growing his empire. Now, the reason why this is so significant, the 1.2 billion euro punishment for Meta is the highest any company has ever seen, fined for breaching the GDPR, and the previous larger fine was 746 million euros, and that was charged for e-commerce giant Amazon. But of course, these fines seems like it's now a cost of doing business. These huge corporations don't seem to care. It seems to be a slap on the wrist, a speeding fine, and then it's business as usual. But listen to what kind of system they're going to be implementing now that's going to mean your data will be transferred across borders much more easily and without you even knowing it. The Meta's case has put focus back on EU and Washington's push to get new data transfer mechanism. The US and EU's last year in principle agreed to a new framework for cross-border data transfer. However, the fresh new pact has not yet come into effect, and I hope it doesn't, everyone. But that's just the beginning. There's even more losses for Meta, and then we're going to get into these huge layoffs. So look at this. Meta sells Giphy to Shutterstock at a loss in a $53 million deal. But wait till you hear how much they actually paid for it and see how much of a silly mistake they made. Meta acquired the popular platform in 2020 for $315 million. That's right, everyone. They paid $315 million, so they're looking at about a $250 to $260 million loss, but was ordered to divest the company by UK competitor authority. Tech companies have faced monitoring scrutiny over their acquisitions and user data collection both in the UK and the US. That's exactly right, everyone. Some of these companies are becoming monopolies, and we need more competition. So for example, if they start to censor, or for whatever reason they don't like what you're posting, you have somewhere else to go and you can take your business somewhere else. But for the past 10 years, there's been only a very select few that have worked hand in hand to do the censorship, but now we're starting to see more competitors come on the market. But what's most important, what we have to pay attention to, are these mass layoffs that are happening and what this is going to mean for the economy. So look at this. Meta started its latest round of layoffs, this time focusing on business groups. The company's round of cuts targets members of Meta's business groups and follows a previous round of layoffs in April that affected employees in technical roles. Around 10,000 people will lose their jobs between April and May. This follows the company's first round in November that affected 11,000 employees. So this is what I'm starting to see in the economy now, everyone. And this is a forward-looking indicator, not a rear-view indicator like, for example, the BLS report. This tells us that the unemployment rate will go up, and that's the only thing that's been supporting the economy and the markets. But once that goes down, we're about to see real fear in the markets and the economy sink in. So Meta employees with roles in user experience, marketing, recruiting, and engineering took to LinkedIn to announce they had been let go on Wednesday. Now, Meta declined to comment but referred CNBC to an earlier post by CEO Mark Zuckerberg saying cuts to the company's business groups would begin in late May. Because what have we seen with these big, huge tech companies? They've had a lot of bloat. These people go to work, it seems like whenever time they want. They get free coffee, they get free breakfast, lunch, and dinner, and these look like very, very good meals. And hey, there's nothing wrong with that, and that's actually a good thing. Reward your employees, they'll be more motivated, they'll work harder for you. But unfortunately, in a recession, when times get really tough, you have to skim the fat. The cuts are part of Meta's so-called year of efficiency, which Zuckerberg pitches necessary for the company to slim down and become more nimble amid a challenging economy and weakened digital advertising market. So Mark Zuckerberg knows what's going to come for the economy. Him and a lot of other tech companies know what's going to come for the economy. We're going to be facing a deep recession, if not a depression. And I guess you could say I have insider information on this. I post videos on YouTube. I see how much advertisers are paying, and the amount they're paying for these ads on my videos and all the other videos you watch is down about half. So that tells me these businesses are not confident to spend on advertising because they're not going to see the demand. Zuckerberg said, as I talked about efficiency this year, I said that part of our work will involve removing jobs, and that will be in service of both building a leaner and more technical company and improving our business performance to enable our long-term vision. But the thing that most worries me, Mark Zuckerberg's long-term vision is artificial intelligence, augmented reality, and virtual reality. He wants a dystopian future where he creates his own world and he is the king and you have no privacy whatsoever. But fortunately, people don't want this and they're losing billions. Despite the cost cuts, Meta is still investing heavily into the metaverse and its Reality Labs unit, which is developing virtual reality and augmented reality technologies, and logged a $3.99 billion operating loss while generating just $339 billion in the first quarter. So this is absolutely crazy, everyone. They had a $1.3 billion fine. They've lost about $250 million on the Giphy sale, and they're losing about $4 billion every year to this virtual reality dystopian future they're trying to build. Now, of course, investors are going to like this news about more layoffs, but what we have to pay attention to is what this is going to mean for the economy. Like I always say, one person's spending is another person's income. So all these people with these high-paying cushion tech jobs that normally go out there and spend in hospitality and services and retail, etc., they're not going to have money to go out there and spend. And the thing that's been holding the unemployment rate down is these hospitality and service jobs. But once these people lose their jobs, that's when we're really going to see the unemployment rate tick up. And then the markets will finally wake up to the reality that a recession is here. And on top of all of this, if the Federal Reserve has to do 1 or 2 more rate hikes, we're going to see more defaults because consumer debt is at record highs right now. We're seeing the report to say there's going to likely be bigger losses on credit cards because credit card debt is at all-time highs, and that's going to mean more trouble for the banks. But everyone, what do you think about this? Let me know down below. Now, if you want to get access to my free newsletter, you can click the link in the description below. You get access to all my research and notes. Thanks for watching. You're awesome. I'll see you all in the next video.